Okay, so the S&P is going up this week, 1.5%. It is doing a bullish reaction just above our support level at the 50% Fibonacci's retracement in the weekly chart. This reaction is good, however, the index is getting closer to a point of no return. This is a critical, decisive moment for the S&P, which could result in an amazing bullish reversal or in another crash. I'm gonna give you guys more details in this video. First, welcome to the Finance Hydra channel. My name is Nathan. Let's do our multiple time frame analysis on the index. First, starting with the daily chart. In the daily chart, after some congestion, it feels like the S&P wants to break free from this congestion and it is trying to do an upwards breakout. Therefore, we see it breaking the 38.2% Fibonacci's retracement over here again, doing a hammer candlestick pattern in the weekly chart. Now, the S&P is getting closer to its main resistance level again, which is this purple trend line up here. This trend line worked as a resistance level for the index 1, 2, 3, 4 times. Maybe it is going to work again, maybe not. Either way, if the index breaks this purple trend line, it will have decent chances of triggering a bullish pivot point, meaning a higher high, higher low, indicating a possible bullish reversal structure for the long term. This is going to be the first bullish pivot point in the weekly chart since 2021. 2022 was a crystal clear, strong bear market, so right now, this year, the S&P could reverse this bearish sentiment and resume the bullish momentum again. However, in order to do that, it is important to see other indicators. Tech stocks are still quite dead over here. We don't see any meaningful bullish structure, any meaningful possible bullish pivot point, and we gotta see yields dropping again. In the weekly chart, the 10-year yields are doing a quite strong bearish candlestick pattern over here, indicating that yes, we could see yields dropping, meaning we could see bonds going up again. And if yields trigger a pivot point over here, a bearish pivot point, a lower high, lower low, then it is going to resume, it is going to trigger a bearish momentum over here, which could possibly benefit our dear S&P index again, and it could seek higher highs, higher lows with more conviction. Now, what is the problem with that? If we analyze the monthly chart, in the monthly chart, in December, the index did a quite annoying bearish structure. This is called bearish engulfing candlestick pattern. And this is a quite dramatic candlestick pattern because if we analyze its statistics, we'll see that a bearish engulfing works as a bearish reversal structure 79% of the time. According to Bukov's studies, which its number is based on hundreds of perfect trades. So indeed, this is a quite strong bearish candlestick pattern. However, this pattern was not triggered yet. The S&P will only trigger this bearish engulfing candlestick pattern if it loses the engulfing low, if it loses 3764. And the 3764 is quite close to the 38.2% Fibonacci's retracement in the monthly chart. If the S&P triggers this bearish candlestick pattern, if it loses the 38.2% Fibonacci's retracement, in theory, it is going to resume the bearish sentiment over here and seek the next retracement at 61.8%, meaning the index will retest 3200 again, resuming the bear market, and this is a real possibility right now because let's analyze this chart over here. But before that, remember, my dear friends, check my website, join the family, the top 5% of traders that can actually beat this market and make some money. My public track record is right here. Again, it is a public track record. Check my website. The link is in the description of this video. Now, let's compare these two charts over here. They are quite similar, right? They are both the S&P, but this one over here is from 2022, since December 2019. Here is March 2020 crash over here, February 2020 crash over here, and we recovered nicely, and this is 2022 bear market. Here, this chart over here is from 1966. Just like in 2020, we crashed, we recovered, and then we engaged in a very strong, annoying bear market, right? Right now, just like in the 70s, we are almost triggering a bullish pivot point. We found a support level over here. We are doing a bullish reaction just under the 21 EMA, and we have everything to go up again, to climb to higher levels. We just gotta break the most important resistance levels, right? This is the only thing missing right now on the S&P in order for it to reverse the trend. We already dropped 18% from the previous top over here, right? Just like during the 60s when we dropped nearly 18% as well from the previous top level. Yes, the charts look quite similar. So we are about to react, right? Well, if history repeats again, this is not the case. The S&P still could drop a little bit more. This chart over here is on replay mode. Let's play the replay. So it feels like nothing is too bad that can't get worse, right? So the situation still could be problematic. It is still a delicate situation. So from this point over here, before we play the replay, the S&P dropped more, 23%. From the previous top level, it dropped 37%. Taking back to the current level over here, the current price action, a 37% drop is not that unrealistic, because if this happens, if the S&P hits the 61.8% Fibonacci's retracement, as we just said it could, it would drop 34% from the previous top level, meaning it still could drop more, 18% from here. So if history is about to repeat again, the S&P is going to trigger this bearish engulfing candlestick pattern, losing the 38.2% Fibonacci's retracement and seek the 61.8% retracement again. Therefore, this is our most important critical support level. Around the 3800 is the area that we should pay attention. 3800. If the S&P loses the 3800 again, this bearish scenario might materialize again and index might crash once more. Now, again, the only thing that could make the S&P avoid this bearish scenario is if it triggers a bullish pivot point in the weekly chart, meaning we gotta break the 4100s again in order to avoid this bearish scenario. In addition, it is going to be good to see the index breaking this purple trend line, but a true bullish pivot point will only materialize if we break the 4100 again. So keep these two key points in mind: 3800, 4100. Let's pay attention to these key support/resistance levels from here. I'm gonna keep you guys updated on this channel, so again, consider subscribing, click on the like button to support me, check my website, join the top 5% family. I really appreciate your audience, my dear friends. Stay safe. See you guys next week. Bye bye.